Assalamu alaikum wa rahmatullahi wa barakatuh. What's up, everybody? It's your girl Khadijah Toto, and you are listening to In Trance, the podcast, where we are the deliberate creators of our own realities, united in light during the darkest hour. We foster spaces of love, acceptance, and truth because we know we are one people living through different simulations. We define and choose to be our own truths while living in a co-created environment within multidimensional realities. With that being said, we're just curious to see how others create their worlds as knowledge and understanding so we can create our worlds to make it a better place. Today, I am so excited to have two guests on this show, and their names are Quinton and Viair. I'm really excited about this because these two amazing people, they have this company called Wealth for Gin, and it's an emerging insurance and budget management, and they help you with your finances, they help you with life insurance, and they know what it is to help clientele and develop financial strategies. And a lot of the times, especially in our communities, we need help with the finances. We know things, we can do things, but there's always that knowledge gap. And so today I'm really excited to have both Quinton and Viair come on the show to talk about their experiences, not just about financial freedom, but the importance of life insurance and the importance of, what is financial freedom in the first place. And they're quite young. So really having that financial freedom at such a young age and being able to move forward and change the generations as we go is super important. So without further ado, I introduce you to Quinton and Viair.
Let's go.
What's up? Welcome to Entrance You.
First of all, your intro was spot on.
You love that.
Hey, you all are awesome. I did a lot of stalking, so I'm excited to learn and hear about everything. I know that earlier backstage when we were talking about how we're just going to go straight in, and the show is even called what are the benefits of life insurance? So we can just go ahead and start there.
Yeah. So one of the benefits is knowing and understanding that life isn't promised to us, tomorrow isn't promised. And so the first benefit is the assurance that your family will not have to pay for your burial. In our community, 75% of those who go on before God, we are faith-based over here. So those who transition, they have to pay, right? Which gave birth to a lot of entities such as GoFundMe, a number of different lending providers that are targeted directly to our community because they know more than likely we're not going to take that step because we are a society of instant gratification, and life insurance doesn't really prove to satisfy that. So a lot of us just don't feel as important enough because we're young or we're healthy or, death is so far. But the second benefit is the living benefit. 60% of us will, in fact, get sick before we die. And so what not only life insurance serves as, protection against death, but it also helps you with life. The 5% of the world, the wealthiest individuals of the world don't invest into the stock market, or not much of their wealth into the stock market. You're talking about Elon Musk, to Warren Buffett, to Mark Zuckerberg. They have over 85% of their wealth, not in the stock market, not in their own companies, but actually in life insurance policies because they understand the emphasis of life insurance. It's not death insurance for a reason. It's life insurance, and that's to help you live and then help the generations to come after you live. So two big key factors in how that all plays a part.
Wow,
sure.
that is so. You know what? I think more people need to definitely hear about this because when I was telling Viair before, I have life insurance, and it does feel like death insurance because when you're reading over policies, it's just talking about death, most of the time and throughout, the scripting of what's written. So you talk about it being life insurance and how these, multi-billion and millionaires have this in they're putting their money there. So can you talk a little bit about what how does that work? How do we make life insurance serve us in life and not only death?
Right. So when you look at when you look at life in general, there's a number of different factors that come to mind. Right. One, you want to protect the number one asset, which is your home. Life insurance helps you protect your home. In fact, we help clients. She's a specialist at this, but we help clients actually pay their homes off 5 to 10 years earlier through the power of life insurance, because the banks are eager to take your house away and then auction it off for their profit. So that's one, is helping protect assets, right? Two is your retirement. You're talking about, on average, especially after coronavirus, 72% of Americans over 65 now will never be able to retire. And those who are in their late 20s like we are, or in their 30s, you're looking at 82 years old before we retire. And then three is, what are these big entities that were set up to help us later on in life that are no longer allowed to do that? Social Security fund. Well, how much money is in the Social Security fund? $0 are in the fund. So they go ahead.
And think about this too, with the Social Security fund, right? With COVID and coronavirus happening, majority of those people are doing what? Starting their own businesses.
Yes.
Right. So that's actually taking away from the fund, right? Because we're not putting our money there when it comes to Social Security, because we're starting our own businesses. And when you're working your business full time, that's not something that you have to do. So what does that look like moving forward, especially for the fund now? Because no one's going to be able, you see where we are today, 5, 10, 15 years from now, as online continues to thrive. What does that look like for actual businesses, for people who are in 9-to-5 jobs? It's just not enough money to invest in that fund. Mm-hmm.
Yeah. So you're talking about asset protection. You're talking about life insurance being a key part to retirement. Most of us are putting our money in a way into what's called a tax qualified plan. That's a 401k, that's a 503b, that's all these different tax qualified plans that the government gives us. Anything that the government gives us, we should be skeptical of immediately. But now what happens? A tax qualified plan works as followed. You defer your taxes and you put money into this fund so that when it's time for you to retire, you can retire. But many individuals, including my parents, including her parents, had no idea that the retirement funds aren't guaranteed because they're connected to the stock market returns. And so as the stock market fluctuates, so does the money in your 401k, your 403b, all of these tax qualified plans. And that's a ploy against the people. If we can get enough people putting their money in the fund, well, the powers that be benefits, because the stock market losses, where do those losses go? Those losses actually go to the top 5% of the world. So it is an attack on the middle class, and not just the middle class of what we know as our parents or our aunts and things, but for us, we are coming up now in a generation where we are the leaders of the generation. And if we don't understand how money works and how things affect us now, or things that we do now will affect us later, then we're it's grim for us. I say that all the time. It's grim for our generation. So it's very important things that life insurance does for providing the important benefits of life. And the last thing is kids funds. Most of us, I have a 6 and a 5-year-old daughter, and my parents was telling me since they were born, put your money in a 529 plan, not knowing that that's another tax qualified plan, which means that one, is susceptible to loss. Two, how many children are going to college nowadays? Ever since 2008, college admissions has dropped consistently 12% every single year. So for everyone who has young children now in their savings for college, we're going to save $18,000, $20,000, $25,000. That's going to go right back into the top 5% because most of our children aren't going to college. So life insurance has different products that will allow you to save your money for your children, no matter what they do. If they want to start a business, if you want to save up, have a house, whatever the case may be, each thing that we have been taught, there are barriers specifically through life insurance that we just don't know about. So very important. Every pinnacle of life, life insurance plays a part in it. We're retired. not because we're rich, because we put our money in the right place. We secured our asset. We'll pay off, our first home 10 years early, not because we're rich, just because we put our money in the right place. My children, my 6 and my 5-year-old daughter, they'll each have $27,000 that they can do whatever they want when they're 18 years old. It's not tied to any stipulation. So it's very easy to see that life insurance plays more than just when you die. They help you secure life on the way to, getting old. So
wow, that's awesome. I mean, how can you have any objections to that?
Yeah.
Like, because, it just seems that the conversation around life insurance is it's never put in the way that you all are saying right now, because it just seems like it's your own bank. It seems like it's your own savings. It seems like it's your own, place to really grow and establish your financial freedom. And it's almost like we're playing on the wrong field, right? Because we think, oh, we should put our money in the bank. Meanwhile, the bank is trading our money, making money off of our money, and we're only making like 1%. But then on top of that, we might be paying the bank to keep our money. So we're getting pimped 360, and then we're coming over into life insurance, part. And this is kind of where I'm really seeing like the ignorance, even of myself, right? It's like the ignorance of, the bank versus the life insurance. So is it like the bank and then versus the private bank, or, like what role does, putting your money away play in that? Like, what does that process look like when you have the life insurance?
Right. So number one, just to hit on something that you said earlier, number one is most of us do what we were told to do, and we don't take time to further investigate why it is that we're doing that. Why are our grandparents telling us to put our money, or our parents are telling us to put our money in the bank? We don't do further research. We just say that's what they told us to do. So that's the law that we're going to go with, right? And then as far as the entities, so you have life insurance and you have banks. One thing that people got to know about banks are not in the business of saving. Banks are in the business of lending. Right. So what they do is they leverage our dollar to go and lend it to 5-6 other people in something called fractional reserve lending. So anyone that's safe housing their money in the bank, understand that that's not a safe house. That's not a box. That's not a security box. That is a ploy for them to go and leverage our money to lend it to other people. Right. So we don't even consider the banks. My money is in the bank for bills. And once it's out, that's it. We don't put our money in banks, because if you're saving, you're getting not even 1%. Some of the high yield CDs, certificate of deposits, are under 1%. When you add inflation at 3% every single year, then what do the government send you? Even if you make 10 cents in that entire year, they still send you a 1099 so that you can pay taxes on that. So it's a huge difference between banks and life insurance. Have you ever seen a rich person at an ATM?
Nah.
You ever wonder why that was the case? You ever seen somebody like, girl, I just saw that rich person walking out of the bank? They don't go to the banks. Number one is because banks are only allowed to insure up to $250,000. So it begs the question, what do the people do who have more than $250,000?
Yep, that was about to be the next question.
Well, they put their money in life insurance policies.
And honestly, we have to think about it like this too. The middle class is slowly shrinking, right? So if you don't understand what the wealthy is doing to get ahead, you're going to always be in poverty. So our parents, our grandparents, all very, very successful in what they did full time for work, but it was all a middle class mindset. So if we don't learn these principles now, there is no middle class moving forward. We're either going to learn it or we're going to be poor. So what does that look like for us, for the generations to come, and for, our children and future children and things like that?
Yeah. So what the wealthy does is, and what we able to leverage in life insurance is, we become our own banks. And that's the goal. So if us three decided to start our own banks, we could leverage $1 million and do what the banks do, and that's lend it out and lend out up to $30 million. And that's what the banks do. It's called fractional reserve lending. We take our 1 million, we lend it out up to $30 million. A bank will actually grant you $30 million to lend. And now we can now start our own credit cards. We can do our own loan, our own car loans, student loans, all of these different things ourselves. And we have the power through fractional reserve lending, right? So we don't even consider the banks. If you saving money in the banks, it just lets me know that you're still in the 60s or 70s, because no rich person is doing that. And the last thing I'll say is, a lot of people think that you got to have a lot of money to be rich. You don't. You don't. Invest in a life insurance policy, a particular product that helps you get a 13 to 14% APR. Those interest rates are in no other vehicle but life insurance products, right? You are able to withdraw money tax-free without that account depleting. The only place that exists is in life insurance policies. That's why you see Donald Trump. What did he do? Many people are mad at him, right? I don't know him personally to be mad at. What is me being mad at him? How is that going to? I'm mad at you, right? No, but what we should be doing is studying him, because he's someone that made $20 million last year and paid $720.
Okay.
And people like, it has to be because he's the president. No, it's actually because what he does, and most wealthy do this, they withdraw from their cash value policies at one time a year, right? And so he withdraws tax-free, and he uses that cash for the entire year to fund whatever excursions that he has. So it bypasses the loopholes. And it's not even loopholes, but they actually utilize the 70s. Got to look this up. Tax code 7702, which allows you legally to bypass the taxes that most of us are levied to do what it is that he needs to do. So we don't even talk banks over here unless we're trying to start one.
That is amazing. Okay, so let's talk. Let's get into it. Okay, so let's say, you're an entrepreneur and you're just starting out, and you always got a choice to go to the bank and get yourself a bank card, or the other option would be what? Get your insurance policy.
Depending on what you're trying to do. Mm-hmm. Right. So if I am so let's not get it confused, right? Like, life insurance isn't an investment route, right? Mm-hmm. Life insurance is everything but the investment route. Everybody think I can try to stack onto my money, right? So if you're an entrepreneur and you use the bank to leverage credit, then continue to do that, right? Use their money. And that's the only time we use banks, is to leverage their money, their business, right, in order to do the things that we need to do, right? So still do that. Don't abandon that. Always use their money. Use their money all the time. But what you do for life insurance is, if I'm an entrepreneur, most entrepreneurs don't have retirements, right? Mm-hmm. So you use a life insurance product to save to fund your retirement, mm-hmm. right? Most entrepreneurs don't have any insurance as far as health, life, and all that. Life insurance plays a part. It's not just life insurance. We also health insurance, right? So mm-hmm. it's a lot cheaper to go through it through a business entity than it is individual, right? So those are just some advantages that you use. And then again, if you want to leverage your children, if you have children under the age of 12, right, you're putting them on your life insurance policy to stack money for them each month, right? So in 12 or 13 years, like I said, my kids will have access to $28,000 tax-free, which is the most important part. Because I'll ask you, do you think that taxes are going to increase or decrease in the future?
Oh, they're definitely increasing.
Right. So how much money will you need to make to keep it?
Yeah, that's a good point.
Last question for you. I know you're supposed to be asking a question.
No, it's okay. No, I'm here.
Last question for you is, do you think that taxes at an all-time low or all-time high right
now? That's a good question.
Mm-hmm.
I'm going to say I don't think they're at an all-time high, because I feel like they're going to just keep rising.
Right. So taxes are actually at an all-time low right now. If you look at the history of taxes, 1913 was the first year that federal taxes was levied on the people in 1913. It was 1%. By 1940s, it was 90%. So that's crazy to think about. So actually, actually, in California in the 1940s, if you made over $200,000, you were paying 90 cents on the dollar in taxes. By the 1970s, it was 70%. So the highest marginal tax bracket in the 1970s was 70%, which means that if you made over $162,000 in a year, you were paying 70 cents on the dollar in taxes. So right now, the highest marginal tax bracket is 28%. So we're at all-time lows, which means that, as you said, taxes are going to get scary within the next 6 years. So we got to pay attention to what Trump did, right? So in 2018, Trump signed something called the Job Raising Tax Cut Act, right? And what that did was it slashed it. He totally remodeled the entire tax structure in 2018. No one's paying attention to it except for the top 5%. So why is he doing that? Why did they do that? And it's so the wealthy has 6 years, so projected, or 8 years. By 2026, they predict that the highest marginal tax bracket is going to be 88%. 88%. So all of us who trying to get money, all of my guys who stocking their money in stocks, and we got $200,000 in stock. You keep it until 2026, you'll probably walk out with maybe 30,000 of that $200,000. So that's another thing, a big factor in life insurance policy, which makes it very attractive to the top 1%, is all of the tax benefits of that. We don't make enough money to pay attention to it, right? But all of us have envisioned to do that. We want to make more money. The problem is the more money we make, by that time, the tax bracket is going to be so high that, as she said, is going to eradicate the middle class. And they're coming with a 3-tier tax structure, which means some of your income is going to be taxed at 20%. Some of your income is going to be taxed at 50%. Some of your income is going to be taxed at 88%. So it begs the question, when we're in our 30s, how many of us aren't going to be able to provide for our children? It's not because we don't make enough money. It's just because we didn't pay attention now and we're not bringing home enough money.
Wow. I'm rarely speechless on my show, but I'm very, it's so interesting because even when I spoke to Viair the first time, it was like, I was like, well, I'm learning things that I didn't even know that I didn't know. Mm-hmm. Because, the finances, it's more of a conversation of checks and balances, right? Mm-hmm. Or it's a conversation of, maybe you'll talk about Roth IRAs, but mm-hmm. you're not talking about insurance being connected with, getting your own private bank, getting your life insurance and having it, because when life insurance conversation comes up, here comes the will, here mm-hmm. comes the, it is like a death sentence. And so it's nice to hear that life insurance is life insurance. And in mm-hmm. fact, it benefits, in both ways of like, when you do die, everything is taken care of, but also while you're still alive, you leverage it in a wealth. That's the generational wealth right there.
That's the generational wealth.
And that's even, I had a friend recently passed a few months ago, and they were like, collecting, money and stuff. And I was just like, wow, you didn't like, life insurance was one of the top things that I thought about in her death. And I was like, she didn't have life insurance, and like, for me, if there's nothing else that I have, I'm having that, like, because, and they were like, well, it's, there was a lifestyle. And I'm like, no, but life insurance is less than your Wi-Fi. Like, there's no reason why you can walk around here with the latest iPhone, but you don't want to pay for life insurance. Like, and it's the prioritization of like, are you truly living and being consciously living? Because if there's anything that you're going to cut in bills, like life insurance shouldn't even be a subject.
Mm-hmm.
It shouldn't even be a matter. But what I'm really learning in this is like leveraging the life insurance, because that's one part that I didn't necessarily explore, because like I said, I was just like, oh, well, how much money will I get if something happens? Okay.
Yeah.
Or how much would my, family get if something happens? Okay, let me write these names down as beneficiaries, if something happens. So for me, it's more about having the peace of mind that if anything were to happen to me, that my family would be okay. Like, like for me, it wasn't like I wasn't thinking about the banking part. I wasn't thinking about leveraging it. So I understood that part. But hearing more, I'm like, well, shit, I need to go through those lines, because what kind of benefit? Now it's like a job interview. I'm the interviewer, right? And I'm like, well, let me see what your life insurance looks like. Let me see what your life insurance looks like. What do you offer? What kind of banks do you have? What is
those are the questions that you should be asking. There's so many people that we talk to too. They're, oh, we're covered. We have life insurance. Okay, what's the name of your carrier? Oh, I don't know. My mom has it. Okay, what's the actual amount of coverage? Oh, I'm not sure. I haven't looked at it in 10 years. Like, those are the things that you need to know, because there's so many carriers that have so many stipulations on how they pay out, when they pay out, the percentage of what you get. We were working with a couple just a few weeks ago, and the wife's mom passed away. And because she, went the cheap route and got this really inexpensive life insurance policy with her mom, it was $10,000, but they only received $3,000 of that insurance policy because they did not read the fine print. They did not, they were so focused on the price and they didn't actually read to see, okay, what am I getting out of this? And you're right, it should be an interview. You should be interviewing this carrier saying, okay, I understand this. I know exactly what's happening, and I know why I'm putting my money here, opposed to just focusing on the price and not the value of what you're getting, because that's what you need the most.
And we have to touch on corporate life insurance. We have to, because that's especially for those in their 20s and their 30s. Everyone comes quickly with, oh, I have a work policy.
Yeah.
I have a policy at my job, which is valid. But I always tell everybody the story of one of my dad's great friends. He was a truck driver, and he obviously had life insurance through his job. And unfortunately, he passed away on his route. Right. So he was driving across the country, delivering whatever it is that he was delivering. And he clocked out and then passed away in the hotel. And guess how much he received from his work policy?
How much?
$0. His family received $0 because in 90% of work corporate policies, they have a clause that's all the way at the bottom that you'll never read that says that you must die on the clock in order to receive the death benefit. And I thought it was kind of, when my mentor told me, I was like, that might just be a little salesy thing that we tell people. It can't be that can't be true. And in fact, we lived it. And my family, so far this year, my family and our immediate family, my parents and I, we've contributed to 5 different funerals. And so including his, because he didn't take the time to read the fine print. And most of us don't. It tells you in there. And guess what the employer was telling his family? It's in there. You just didn't read it. And his family, he died 32 minutes after he clocked out. Dang, give me $5,000.
Yeah.
They said, you didn't die on the clock. And for most of our corporate policies, it's either that clause or the second clause that's in a corporate policy is your death benefit is taxed, right? So with most private policies, the death benefit is tax-free, right? For 2 reasons. One, because life insurance companies know that taxes are rising. And number 2, to keep up with inflation. So think about it. You have a corporate policy in 2026 and you pass away where you have to pay 88%. So think about you thinking, or your family thinking, hey, I got a $100,000 policy. And if I pass away, whether I'm on the job or not, my job doesn't have that stipulation. No, but you're paying 88% in taxes on that $100,000 death benefit, which leaves you with how many? Just enough to bury you, because corporations understand that, one, they're the beneficiary and they're the owner of the policy, which means that they're going to receive the benefit, not your family. Most of us don't know that. We just say we have it. And it just is a testament of us. I question everything to her annoyance. I want to know why. Why are we doing this? Yeah. Why are we sticking to this? Like, why did we go to college just because our parents told us? And most of us say, because our parents said it. Why do you have your money in your bank account? Just because. Why do you contribute to a 401k plan when you aren't sure if that money is going to be there? Just because they told me. Why do you have your money in a savings account where you're actually losing money over time in your savings account? That's what they told me. And that's how it is. We live by, that's what they told me to do, so I'll do it, instead of doing our additional research, which takes 2 minutes. How long does it take to Google? 2 minutes. But we'll just rather do what they told us that we're going to do. Some of us are living 40 years in retrospect. Like, bro, they don't do that anymore. They don't do that. So
it's like the same way technology has evolved, so has all the other industries. And what I'm really learning here, and I'm not going to hold you all too much longer, about 3 more minutes or 2 more minutes actually, is just, in throughout this whole conversation, what I'm realizing is, we are the generation to change things. And I love that it's called Wealth for Gen, because it definitely is our generation where these are conversations that are going to be common with our children. These are, and it's not even within certain people's awareness, right? To even, one, think about that, or two, even have people who understand and know that information. And financial literacy is starting to improve, but it's still, shrinking. It's still low, and that's a whole industry in itself that's just looking to boom. And, I'm excited to ask further questions, definitely like after the interview and everything, because I want to know, what am I, am I wasting my money with my current policies, because at the end of the day, like being an entrepreneur and like officially, once that money starts coming in, I want to make sure that, I'm making my money and keeping it and it's growing versus, someone just holding it or charging for anything. And, what are the best ways to move? Because at the end of the day, we're playing on a chessboard. And if you don't know what, the knight and the queen are supposed to do, then you're not going to be able to play. So it's like learning the rules to the game to play. But I just want to say thank you all so much for coming on, Quinton and Viair. I mean, it's been a wealth of knowledge, that you all brought on, and it's only been 34 minutes, but it's just been, I'm so like, my brain is just like so expanded because and I'm sure the audience as well, learning things that, didn't know before. And I would love to have you all come back whenever you get a chance, because, or even like, I don't know, some type of financial literacy. I just think this needs to be out there more. So I'll definitely sharing more of your content and more of the things that you all have to say, because it's definitely information people don't know that they don't know.
Yeah, absolutely. Yeah. So last thing I'll say is actually in the Bible where, and it was kind of startling, but God kind of puts the responsibility on us. When you're over the age of 12, it's your responsibility to receive Jesus Christ as your Lord and Savior. All you have to do is be exposed to the information one time, and it now goes from, no responsibility to your responsibility. So for everyone listening in, you've heard this. Now it's your responsibility to go and do some further research. And as Jesus said, when he appeared to the last time to his disciples, he said, go and make disciples of the nations. So it's our mission to go and do the same, right? We're supposed to spread this to the nations. And I believe that for sure.
Yeah, thank you all so much. Actually, usually I don't put the interviews on my Instagram, but this is definitely gonna be one I do because it is very informative and it's vital. I would say I believe it's vital for our community and what you all are doing. You all are angels. So thank you so much for doing the work and allowing your hands to be used.
Yes.
Yeah. So thank you for having us.
Thank you so much for
Appreciate
having us.
this.
Appreciate it.
It was a lot of fun. Well, you all go ahead. I'm gonna close out the show and I'll talk to you all soon.
Okay.
Alrighty.
Thanks so
All right.
much.
Have fun in your appointment. Bye. And that's it. You all heard it. That's Viair Charlize and QT.McCoy. If you go onto Instagram, go ahead and, follow them. They are a wealth of knowledge. I happened to see Viair online, doing some reels about, insurance, life insurance. And I'm just so happy and grateful to be able to be here today and to explore all of the wealth and the knowledge that has been had and that's been carried. It's such an exciting opportunity to be able to move forward, to push forward, and to do what we do. So once again, this is Khadijah Toto. Thank you all so much for tuning into In Trance You. Be sure to catch us next week and the weeks coming. And this will also be on Instagram. So if you don't follow us on Instagram, you can follow us at Khadijah Toto, which is KHADIJAHTOUTOU. And you all have a beautiful and wonderful evening. Good night.